Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. Hope everyone is doing well. Got a little espresso going on here this morning with some ketones in there. All right, just the way everything a growing body needs. Hope everyone had a good weekend, a little time away from the charts. And we're going to be kicking off this week, which shan't be a boring week. Let's take a look at the economic calendar. That's probably the most significant, and not even, obviously, for those of you that don't know, but I'm sure everyone who's been listening to Charts and Coffee knows this. On the 26th, we have the FOMC, and they're going to be announcing their decision to hike a quarter point, right? We're going to get a quarter point hike out of Powell and Company. The question will then be, probably in the statement, but most definitely in the presser, does his take on inflation sound victorious, as if the FOMC's plan all along has been working and we're just incrementally seeing the fruits of all that decision making? The interesting thing is, not but two sessions later, on Friday, we'll sort of have the bookend to that. Obviously, there will be comments on inflation and how they've been tackling inflation and any concerns they have about it. Come Friday morning at 8:30, we have the core PCE release. And the core PCE will be interesting because in many ways it will confirm whatever is said from that Wednesday decision. And so if there is going to be possibly another quarter point hike in 2023, it's data releases like that, especially in such close proximity to an FOMC decision, that will, one, in our minds collectively, right, either confirm the FOMC is on the right path, right, or it's going to have a lot of volatility as we readjust to, well, what would ultimately be their readjustment. Yes, I know it's lunacy, but this is the game we play, right? It's not about trying to change the rules or comment on the rules or say the game is dumb. It's just, this is the game, right? So this is the game. Someone thought it was a really good idea to whack a small white golf ball with a crooked club all over hundreds and hundreds of yards. It's the game, right? We just play it, or we don't. But since you're here at Charts and Coffee, you've decided to play the game. So that's what we have coming up. We do have a GDP number, and it's probably in the mix of everything that's happening this week, just in the data, probably going to be a little bit kind of lower down the hierarchy of importance. And then the second calendar we have to keep an eye on is this one, and that's the calendar for earnings. And this week is a pretty major one. Forget just tech alone, Google, Microsoft, Texas Instruments. We've got Meta coming up, Comcast. But this week, we also have a number of heavily weighted stocks and sectors that have just started to wake up and are supporting the Dow. Things like Honeywell, right? UNP. So this is a really, really big week in terms of earnings and some new, if not arguably vulnerable, uptrends that we have seen in the last week or so. XLF, in the transition from Q2 to Q3, has turned into an uptrend. XLV looks like it's well on its way. Both Johnson & Johnson and UNH were able to buoy above that 200 period exponential moving average, the equator, right? So really, really important moves last week, now being followed up by a number of major earnings. So earnings are most definitely going to be a big part of what ultimately, from a volatility standpoint, if we're looking for mean reversions, if we're looking for pullbacks to those daily price movement ranges, these could be the catalysts. All right, so that's a quick 5-minute summary of what is on the radar for this week. Does that change what we do? Absolutely not. Every morning in the Sector Secrets Mastery, we start the day off with about an hour of day trading. Take advantage of day trades, whether those, and I don't mean in and out scalping type, not that there's anything wrong with that, but what kind of day trades are relative outperformers that might let us let it ride for the session, right? I'm not talking in and out type stop and reverse trading. I don't like to do that. What I like to do is find the relative outperformers and try to find names that will follow through at least for the morning session, and then maybe even after. So we slow the process down. What do you hear every great athlete talk about? I don't know how many of you watched Messi's big debut at Inter Miami, scored in the closing moments for the win. You know, when you talk to great athletes, and I've had the privilege of talking to quite a few, I always ask them, what do you notice when you have a good game? Because to me, trading is a game, trading is a sport. And they all say the same thing. Everything slows down. So why not slow the game down? Because we can do that, right? A baseball player really can't slow the game down. A football player really can't slow the defensive backs running at him, right? But we can. So think about slowing the game down. After day trading, we move into swing trading. What are those longer term time frames, 60-minute daily time frames that could give us days of follow through, overnight exposure in those trends? And then finally, once a week, we get together and look at the weekly charts. We think about how we can build a longer term position portfolio. I mention all this, gang, because if you don't know already, on the 2nd of August, I have a webinar, and I'll tell you what the webinar is about right now. If you are interested in joining me through the month of August 3 to September 1st, we are going to have a trial, an immersive experience in the Sector Secrets Mastery, $7. We do not do this often. I can't even remember the last time we did it. So if you want to join me in the Sector Secrets Mastery, I'm going to walk you through what I've been doing this year, what we've been doing in the Mastery this year on the 2nd. And on the 3rd, the trial begins. All right. This will be the only trial for quite some time. So if you've been wanting to join us, I want to make sure you know it's $7. All right, gang. So let's jump into the questions, kicking it off with good morning. Good morning. Great to see everybody. All right. So Ed asks, Meta, Amazon, and Microsoft seem to be pulling back to the 34 EMA wave on the daily. All right. Let's pull that up, shall we? Let's stick with some trading view charts here. Okay, so Meta, in terms of the wave, those names specifically, Ed, the challenge with those names are basically going to be, for me, this, and singularly this. We've got earnings in a lot of these names this week. So the challenge is ultimately, if we want to buy the pullback, right? And we have earnings coming up. Is there a possibility, if not a likelihood, that we could have greater than normal, greater than historical volatility, sort of normal movement? And that's why I would rather wait for those earnings releases to come out and then reassess what is the stability, the quality, the support in the trend, and then re-engage after that. Because and another reason too, Ed, and it's more specific to what I do, which is that what we do in the room, which is that daily time frame type approach of swing trading, mean reversion, daily price movement range support buys. Is there a possibility that something like that's going to be broken with as volatile an event as earnings? The chances are yes, right? So that's one. The second thing is I like to play long calls in an environment like this exclusively. I'm not a big fan of spreads. If you're looking for a very scalable, doesn't matter the size of your account type mindset approach, if you're looking for a much more simplified approach, long calls are great. Long puts work fantastic, right? The challenge is inside of the 7 to 14 days to earning, implied volatility goes way up and we're at a distinct disadvantage. So for those reasons, Ed, I'm going to wait until that data comes out. We'll reassess, we'll re-engage. All right, Praveen asks, how can I see the hourly price movement range and the multi on a mobile platform? Praveen, the best way and actually I'm on TradingView, so great question, Praveen. The best way to have the indicators that I make available on Thinkorswim, they're also available on TradingView. So hang on, let me grab my phone here. So the thing to remember is that, let me pull up TradingView. The best way, actually I think the only way to pull up charts with the indicators that I use is on the TradingView platform. And right now I just can't seem to, let's see, chart. There we go. There we go. I don't know if it's even visible, but you see all that? There's the multi at the bottom. I've got my wave, grab, all that good stuff. HPMRs on the phone. Trading View, gang. Trading View. I would recommend waiting for one of their sales, or you can sign up for TradingView, go through the trial, and then at the end of your trial, they usually offer a 40% off sign up. So take advantage of the discount. I've been paying for TradingView for over a decade. Happy to do so, and I take advantage of those sales as well. If you need a mobile platform for your charts, TradingView, and then if you want to execute your trades on your phone, which I do quite a bit, I'd probably say 40% of my trades, especially for swings, the way we do them in the Sector Secrets Mastery, is on my phone, because I'm not always in front of my desk. I might be at lunch, whatever. Tasty Works, Thinkorswim, you could easily put in a buy a call type order, since we're not doing any kind of multi-leg, overly complicated type spreads. I'm not a fan of those, quite frankly. So yeah, it's very doable, Praveen, very doable. All right, next up, Ronaldo asks, do I trade futures options? What are the pros and cons? Yes, Ronaldo, I do. One of the reasons I do like trading futures options for swings specifically is because it's an easy way to control risk by getting long a call, long a put. It's oftentimes less expensive than, say, the underlying initial margin requirement for overnight exposure. Remember, gang, I think futures trading is very popular for the leverage and for the very tiny margins that we can trade them with when we're day trading. I think a lot of futures traders, a lot of new futures traders, most of the time find out painfully and quickly that going into a highly leveraged product like futures and day trading them with stars in their eyes because they think they can multiply an account very quickly, that tends to crash and burn, right? Because leverage is like horsepower. If I throw you in a super, super, super high performance car and you've never driven before, probably not going to end well. And that's what happens. Futures options are a very cool way to reduce the risk, but still give you exposure to those moves. But I will also say, Ronaldo, a lot of futures contracts have ETF options as well. So let's say you want to trade corn. There's ZC options, and then there's the CORN ETF, right? We all know, with bonds, there's TLT, and with the futures, S&P, there's SPY or SPX, but there are a number of other gold and GLD. There are a number of futures contracts that have, yes, the futures options, and then also the ETF. And some of you might say, Rog, I really like the futures and the futures options because the preferential tax treatment. I get that. I try not to make decisions in my trading based on tax ramifications, but I get it. So yes, I think they are a fantastic first step into futures trading. Yeah, absolutely. And you could futures options day trade the way that we say do the SPY. So if you're in the mastery and I have a setup for the S&P and you say, gosh, Rog, I don't know that I want to trade the micro. I'm not a fan of them. And I don't know that I'm ready for an ES mini because of the crazy leverage. Wow, can I grab an ES option? Absolutely, because it's the same process that a number of the mastery folks will be doing to get into the SPY or the SPX. This is the choose your own adventure part of it. And so thanks. Great question. Great question. All right. Next up is, all right, question on the IGV. The IGV is timing for a long swing. Any ideas? So when you look at IGV, remember, IGV is going to very much be like QQQ, XLK. In fact, if you look at the weighting, it's very similar to that. So it is setting up. The challenge with any ETF, really any stock, the challenge in some situations is not whether or not they are good setups. It's whether or not there's liquidity in that symbol. So if I look up IGV and I go out to, let's see, I'm going to look around my camera here. I look out to the 18 August, right? The liquidity is meh, right? So I'm not going to buy IGV shares, although that's perfectly fine. The issue is going to be whether or not when I crack open the August 18 IGV, whether or not I've got liquidity there. So my main issue with the IGV, Rafael, is going to be not that the setup isn't beautiful. I'm with you. It's going to be, do I have at least a 500 open interest to justify getting into a strike in that option? So that's where the wheels sort of come off the wagon. If you take a look at the liquidity at the option in the option chain at the specific strike that you want, and you don't see at least 500 open interest, no go, my friend. However, maybe take a look at some of the heavily weighted stocks within it. That's a process that we do. We look for a stock proxy. And that's a very common process that we have in the mastery. All right, can we take a look at XLY this morning? So remember, Mehdi, we have Google, and Google is, obviously heavily weighted. And let's go back on over to here we go, right here. When I look at this week's earnings, see how we have Google tomorrow? Scroll down a little bit more. We have Amazon on Thursday. That's number 2 and number 1. So Google, Amazon, those are heavily weighted in the XLY, the Consumer Discretionary ETF. So please, please, please be careful. If you're looking at XLY, you're really looking at Amazon. You're really looking at Google. And if those have major events, please be aware that that XLY has to move with the volatility in those stocks. And why? Because their weighting is so disproportionately heavy that whatever those stocks do is what the XLY is going to do. In fact, your top 3 are Amazon, Tesla, and Home Depot, actually. So be very careful with XLY. Maybe day trade it, maybe very, very short-term swings on a 1 hour. But ultimately, that might be a situation where I'll say, hey, just avoid it because of the hot zones. And then after the earnings hot zone, you can re-engage. And XLY would be a really great way to take advantage of both those stocks in a less expensive or combined way. So I love that. XLY is a pretty good looking corner of the NASDAQ. I mean, obviously in an uptrend like the NASDAQ is. All right, next question is on SHOP. We like SHOP. In fact, let me pull this up on TOS for a moment, and I'll show you what we're looking at in SHOP. So a bunch of folks were asking me last week, what we thought of SHOP. And I said, look, SHOP is cool, but only if it goes down and touches, like it did at the end of Thursday, the daily price movement range, right? If it goes down to that gray zone, this is the historical volatility of SHOP mapped out as a gray support level, a gold resistance level. When it sinks down into the gray, like it did on, for example, the 12th, the 13th, the 20th, those are opportunities to engage in an overall long position in a stock, as you can see here, that has an overall uptrend, green over green on the multi, green momentum, green trend. So if I'm going to buy SHOP, I've got to already have been in, or I've got to wait for something closer to, say, 64.20 before I can do it again. So at that pullback level, and then again, I got to think about when earnings are for SHOP, which I can't recall off the top of my head. But when are earnings for SHOP? In 9 days. So that's inside also that implied volatility. Yeah, implied volatility. Yeah, there you go. The implied volatility increase inside 14 days. All right. The question is, the link should be simplertrading.com. Opportunity. Sorry, gang, my light is just shining right in my face. There we go. simplertrading.com/opportunity. And that's it. Value woman. That's the I'll have the office check on that. But yeah, that's it. That's the registration page. Thank you for asking. And that's it. simplertrading.com/opportunity, finding clear trades in today's market chaos. So yeah, I'm going to walk you through a market view, but I'm just letting you all know we're going to be offering a $7 trial. And so that's the offer. I don't want anyone coming in thinking, okay, What is the pitch? I'll be frank with you all. We are offering a killer deal on a trial package. I don't want you all to miss it, right? And so I am going to walk y'all through what we've been doing in the master. We're going to get in some tactics, and I'm going to give you a little bird's eye view of what we've been doing in the room. All right, gang, have a great one. As always, thanks for being here for Charts and Coffee. I will see you all tomorrow, same time, same station. Be good to each other.